Crypto is becoming more and more popular all over the world, with many people investing their money in digital currencies. However, the lack of understanding about taxation laws, coupled with the anonymity provided to these virtual currencies, has made tax administration a real challenge for governments as well as for cryptocurrency investors. The majority of users don't pay taxes on their crypto trades because most of them are trading under their own names, which is perfectly legal under current laws. However, there are other users who will be forced to pay taxes on their crypto investments, and that's not something that anyone wants to hear. In this video, we will explore the various types of taxes you might have to pay when investing in cryptocurrencies, as well as tips on how you can minimize your tax burden by taking some of these costs into account. What are taxable crypto trades? With the increasing popularity of cryptocurrencies, it is not surprising that more and more people get interested in trading them. Cryptocurrency trading is a very lucrative business, and people have started to realize this. Once, there was only a very small number of traders in cryptocurrencies, but nowadays you can find many more people trading than before. As the number of traders increases, the government gets more interested in trading activities as well. In fact, some countries have started to collect tax from traders, and this is something that makes many people very nervous. If you are trading cryptocurrencies under your own name, you will not be subject to taxes. However, if you trade under a pseudonym or some other fake identity, you will have to pay taxes on your profits. How to avoid paying taxes on cryptocurrency trades? If you decide to invest in cryptocurrencies and make some trades, pay attention to the types of cryptocurrencies that you can buy and sell. Remember that you can buy and sell most cryptocurrencies, but certain ones such as gold and real estate are not allowed to be traded in a regular way. You should check the rules of the government of the country where you reside to know if you can sell any of these cryptocurrencies. You can also avoid paying taxes on your cryptocurrency trades by only making day trading investments. Day trading means that you only keep a small amount of your investments in the exchange and make a large buy or sell transaction after a specific time. This way, you can save a lot of money on taxes since you only have capital gains and not trading profits. Types of taxable crypto transactions. There are different types of transactions that might be taxable or non-taxable depending on the laws of the country you reside in. Let's discuss these types of transactions in more detail. 1. Buying. Selling cryptocurrencies. You are not allowed to buy cryptocurrencies with cash or any other type of payment. So, buying and selling cryptocurrencies only takes place in the exchange. It is important to note that buying cryptocurrencies with your own money is a taxable transaction. You will have to pay taxes on the profit that you get when you sell your cryptocurrencies back to the exchange. Selling cryptocurrencies is also a taxable transaction. You will have to pay taxes on the amount that you receive when you sell your cryptocurrencies back to the exchange. 2. Involving others in trading. Involving others in trading is also a taxable transaction. You will have to pay taxes on the profit that you gain when other people buy or sell cryptocurrencies with your name. It is important to note that if you want to export cryptocurrencies to a foreign country, you are not allowed to involve any other person in the transaction. In this case, only you will be responsible for taxes. You can also use a service that allows you to trade cryptocurrencies without involving other people. Using this type of service will allow you to avoid taxes and avoid having to share your profits with anyone. What happens if you don't pay taxes on your crypto? If you decide to invest in cryptocurrencies, but you don't pay taxes on your investments, you are putting yourself in a very vulnerable position. Cryptocurrencies are becoming more and more popular, and this might make the tax administration very interested in these assets. If you don't pay taxes on your profits, the government might come after you and ask for tax for non-payment. This can have a very bad impact on your business, and it can even lead to penalties and fines. It is important to pay your taxes on your cryptocurrency trades because it will help the government to understand the importance of cryptocurrencies in the financial system and to understand how these assets are taxed. If you don't pay taxes on your crypto trades, the government might not understand the importance of cryptocurrencies, and it might not understand the need to tax these assets. Conclusion. Taxes are an important part of life, and they should be paid by everyone. However, many people are afraid of paying taxes because they don't know where to start. You can't be smart with your finances if you don't understand taxes, and they are definitely not something that you want to mess around with. The best way to get things under control is to start by understanding what you have to pay. In this article, we discussed the various types of taxes that you might have to pay when investing in cryptocurrencies.